So yeah, you think it's transitory?
Well,
Andrew, Philip, we're the Serious Brothers. We've been investing in real estate for over a decade now, a couple hundred units, and we predicted back in May of last year that inflation was not only coming, but it was already here, and it was going to get much, much worse.
you know, I'll take that one up. I also predicted the sun was going to rise this morning, so I'm actually 2 for 2 on my predictions.
Did you predict that yesterday?
No, but I did today, and I got it right. So, I'm 2 for 2. I'll take it.
So this was not a hard call to make.
No.
Something like 80% of all of the dollars in circulation have been printed since the beginning of the COVID pandemic.
The dollar's relatively new. So,
yeah. Now there was a recession, and in recession we don't need to go into this. In recession, money is destroyed, and expansions it's created. So it's not just 80% more money, but there has been a ton of money just printed out. Endless quantitative easing, where the Federal Reserve is buying assets and pushing money into the economy, pushing down the interest rates for banks to lend at, and this creates more money. More money circulates, especially with fewer goods as COVID, the lockdowns, all the rest of those things. That's going to lead to higher prices. That's just kind of economics 101.
I mean, people get really confused with the dollar because we use it in such a different way than other things, but the dollar is basically just a commodity that people use for transactions and to pay government taxes, basically.
Yeah.
And that's effectively what it is. And when you have more of a commodity, the demand for that commodity goes down because there's more supply.
There's
simple.
There's no real reason to see that money going away or production increasing so much.
Yeah.
It would catch up with the amount of money that's been printed. If you look at the history of inflation in the United States, there have been 2 major periods of high inflation since the end of the World War II. The first one was right after it. 1946, you had like 19% inflation.
The one no one ever talks about.
No one ever talks about it because it's short-lived, and it had to do with they released the price controls because they had all these price controls during the war, all these, rationing. You can't eat butter and blah blah blah.
Well, in Britain they did this heavily for a very long time.
Yes.
Yeah.
And so you had a couple of years of extremely high inflation as sort of that pent-up demand, just people just running out there buying things. Now they can charge whatever they want for them. Also, after World War II, you had extremely high production. The United States was, amongst great powers, the only one that didn't get completely obliterated. I mean, Germany was in ruins. Japan was in ruins. England had basically bankrupted their empire.
The economic growth was unprecedented, really.
And so it was unprecedented, and it was also like the United States was in this unique position it could easily catch up, and you had this very unique situation with all these price controls that were released.
We're not going to have that situation happen.
Completely unanalogous. It's not happening.
Yes.
Forget about it. Get it out of your mind.
We're not getting out of inflation that way.
Yeah. The other one is the 1970s, where you had a decade plus of really high inflation. And this got up as high as into the teens, but was almost always in above 8 or thereabout. And this was killed when the Federal Reserve Chairman, Paul Volcker at the time in 1982, he made the decision to break the back of inflation and just went crazy on the interest rate.
I mean, it worked, I guess.
It
so,
worked.
I mean,
the economy
it hurt people, but it worked.
The economy went into a deep, albeit short, recession in 1982, and it was a tough pill to swallow because the discount rate is the important rate here. This is the rate that the Federal Reserve lends to banks at.
Yeah.
And if you look historically speaking, it has generally been between, it oscillates quite a bit depending on where they're at, but since they started it in the early 50s, it has been between 2 and 6% for the most part. Volcker jacked it up over 10. To the point where interest rates in the economy were so high, 12, 13, 14% for loans, that's when seller financing became a big thing. Because
people couldn't buy houses because the interest rate was 12%.
Yeah, it was just a joke. So that is when
every loan was hard money back then.
Now, the thing about it is, I think people just don't understand, especially of our generation and those younger than us, Generation
millennials, even a lot of Gen X, just never lived with inflation before.
There's never been a high interest rate environment, never been inflation, and now we're going to move at least into the latter, maybe the former to a little bit. But the discount rate since the Great Recession was just dropped down to like 0.5, and it started to very slowly creep up to 3%.
Which is still basically, that is a historical anomaly in terms of how low it is still.
That is at the lower end of the kind of the historical average. So far,
and that was the peak that it got back to.
That's the peak it got back to.
Yeah.
It's been at 0.25 since COVID, and they just finally made a decision in March of this year to move it up to 0.5, so there'd be a couple of increases, 6 more increases this year to get it to, they're aiming for 1.9, and then 2.8 by the end of next year. But that is still an historical low.
And this is now 14 years since, I mean, I don't think people realize how long the Great Recession was. I mean, it's 14 years ago, 15 years ago.
And there's been a lot of pushback on that.
Yes.
There's been a lot, like, oh, people are just, like, the markets are volatile and everybody's complaining. And I loved those low interest rates. I kind of
Well, it creates a lot of speculation, and people get mad at all the speculators, too.
Is there the political will of a Paul Volcker to actually take this on? I mean, you look at predictions where inflation will come down to like 4% or 3% next year. Like, why? Like, what is the reason that it would go down? I mean, I guess I don't have a crystal ball. Production could go through the roof.
I don't see how that's.
I think a lot of people think that inflation is heavily driven by the supply shocks, particularly with regards to with Russia and the war in Ukraine.
That's not going away though. If the war ended tomorrow, the relationship with Russia is not being repaired.
No, and it's also getting worse with China, and China has made a line. I mean, effectively, I am of the opinion that the second Cold War has started. I mean, it's really just
it's going to have a different flavor, I'm guessing, but maybe.
It will be better if the war in Ukraine is ended, and hopefully it is ended as soon as possible. But it won't solve this.
No.
In some ways, this is more than just a supply issue, and like the supply issue is not going to be solved entirely. You know, Russian fertilizer and oil, that's not necessarily, you know, they sell it to somebody's eventually going to have to sell it to us, but there might be more markups, more end arounds, you know, boycotts, blockades, it's sanctions, etc., which will cause all sorts of issues. But also, I mean, dollar hegemony is an issue here. This gets into a whole new category, but the United States dollar is the reserve currency of the world. Many countries hold large deposits of the dollar. There's the petrodollar, Saudi Arabia, and OPEC trade in dollars only, which elevates the price of the dollar. If that starts to not end but weaken, and becomes a bilateral world, it has weakened
because politicians have abused this privilege for decades now.
Yes, and they've also started doing, like, if you look at like World War I, like or wars back in the days. They'd be invading each other, but still making debt payments to each other. It sounds absurd, but they still. We confiscated Russians' reserves when that happened. So that when the war started, so the dollar is going to weaken in terms of its reserve status.
Now, I don't think. I want to be clear here.
Yeah.
We're not talking about hyperinflation. That's not happening.
That would require a complete end to dollar hegemony.
There would be so many bigger problems than hyperinflation if hyperinflation happened, in my mind. High inflation is the thing. I don't think the dollar is going to lose its reserve currency status soon. I think it might weaken, but there's also not a good replacement out there anyways. So that's kind of what keeps its position. But these are still issues that are getting stronger and weaker, and at some point these things will kind of start happening.
It is going to get weaker. I think it already has.
Which will cause problems, but it's not the catastrophic problems
various countries and organizations will maybe hedge their bets, replace some of their dollars with other currencies. And that means more dollars come back, more to the United States, more go into circulation. If a dollar is sitting in a bank account doing nothing, it might as well not exist. So these are all reasons that inflation is going to continue. The dollar is getting weaker. A ton of money was printed in the economy. There's no real reason to think that production is going to increase dramatically anytime soon. And the supply issues with regards to the Russia, China, etc., they might get a little bit better, but I don't see this Cold War, which I do think it is at that stage, is getting any better.
Well, and then again, it goes back to, does someone have the political will to do what they did in the 80s and rise interest rates? And I don't think any politicians are willing to drive the economy into a recession and say, yes, we're doing this for good, and I'm going to keep my position. They're going to get voted out if that happens.
I mean, well,
so they don't want to do it.
The Fed chairman can't get voted out, but
but the politicians can make it so they
there'll
don't
be a
want
lot of pressure on them, and I just don't see anyone with the political will of Paul Volcker, or even if Paul Volcker came back, you know, he was reanimated to life and somehow got his position at the Fed chairman, would he do it? Would he be willing? Because I think the economy is a lot more fragile today than it was in the early 80s. Now, a recession is going to come sooner or later. The yield curve just flipped for a very short while.
There's always going to, the best predictions, there's eventually going to be a recession.
There's going to be, that's their third correct prediction. Eventually there will be another recession. And that will cause, whenever there's a recession, generally, inflation goes down. There was an inflationary recession in the 70s, which we very well might have. But generally, it will at least cool it off. It will at least bring it down because money is being destroyed as debts are not being paid. And so that is kind of the recession caveat. Recessions will when it comes, it
But
will
if that's
reduce
the
inflation.
way
But
to
it probably
slow,
just
if that's the way to slow inflation,
Yeah.
people aren't going to care. They just aren't going to care.
go
They're
go
gonna care
with
about
the
recession
history of
happening.
how the Federal Reserve has behaved. They're going to drop interest rates right back to where they
Yeah,
were as soon as the recession starts.
It's
So
it's not going to fix it.
there is no political will to end this. Eventually, as John Maynard Keynes said, in the long run, in the long run we're all dead, but that's what he said. But in the long run, eventually, yes, inflation will probably work its way out of the system. But every indication to me is that this is going to be a decade-long issue. The 2020s will be the 1970s. And we're going to have inflation for a very long time.
And again, the dollar is really just an investment. To keep your money in dollars is an investment. It's one of the most stable investments in the world, but it's one of the worst returning investments of it. It will always go down in value over time. But it's very stable. It doesn't go down very fast. It just goes down consistently.
No,
and
it's accelerating.
True, and that's not good. But, where do you think interest rates are going to go?
They have to go up.
Yeah.
And honestly, if they were actually to try to
some
stop inflation, they'd need to go up a lot more than 1.9% on the discount rate. But we are going into a higher interest rate environment. It is going to be something more like a normal interest rate environment, historically speaking. But it's something that Zoomers and millennials are completely
We haven't dealt
unused
with
to.
it before, and we got to get used to it because it's coming.
So, if you want to learn about what effects that will have on the real estate market and how to approach that as a real estate investor, please check out our next video here.
And subscribe.
Do that as well. Do all of it.